Hey guys, and welcome to the trading channel. First off, I want to say thank you for being here with me today and watching this video. I want to say thank you if you are a loyal subscriber here to the trading channel. And if you're not yet subscribed and you'd like to be notified whenever I come out with free educational content about Forex, then make sure to click that subscribe button. Now in today's video, we're going to be discussing a trade that I took on the Aussie yen that is currently up a little over 200 pips. Now I took this trade using a reversal trading strategy that I teach over at the EAP, one of the paid programs I was talking about. But as a special thank you to everyone helping me to reach 10,000 subscribers, I decided to do a tutorial on that strategy today here on YouTube. This is a very simple reversal trading strategy that only uses structure. There's no indicators that you'll have to plot on your chart. And as long as you know how to read support, and as long as you know how to read structure, support, and resistance, you should have no problem testing and executing this strategy. So if you're interested in learning a little more about this reversal trading strategy, then make sure to sit tight through the intro and disclaimer. Click that like button for me, subscribe if you're new, and I'll be right back. Welcome back, guys. Alright, so before we get started and look at the Aussie yen trade, what I want to do first is teach you guys a little bit about this reversal trading strategy. So as I said, this strategy is based completely on structure, and while I know that most of you probably already know how to read structure, I'm actually going to go ahead and go up to a blank chart and show you guys exactly what I'm looking for this reversal trading strategy. This will act as a refresher for those of you who already know about structure and will help any of you who are brand new to understand how to read structure. So as we know, the market moves with impulsive moves and then retracements, right? We have impulsive moves and retracements. Impulsive moves, retracements, a lot of times these retracements come down to previous levels of support or resistance, and that's where the market finds support or resistance again. So how do we capitalize on this when using this reversal trading strategy? Well, in this reversal trading strategy, what we're going to be looking for is the market to break one of these previous levels of structure. So as you can see, so far we've been putting in a new high and a new low every single time, right? So in this reversal trading strategy, we're going to be waiting on a lower low to happen, lower than this previous low here. And that might look something like this. So as you can see, we made a newer high, but after making that new high, the market broke support. This is going to be our first indication that this market may be reversing. Now, there are other aspects to this strategy. If you went through the market and only traded every single time the market broke structure to the downside, and you traded short every single time this happened, then you would more than likely not be profitable. So one aspect that we have to consider because of consolidation, so actually let's draw out some consolidation. So as I just said, if you just went through the market and traded every single time the market broke structure to the downside, you went short, you would more than likely lose money because 70% of the time the market's in something called consolidation, where we're doing something like this. What's there left to say? And if you can see, we have many times that the market breaks through the previous level of support or resistance and does not continue in that direction. This is what we see a lot of times in a ranging market. So an important thing to realize about this strategy is that you want to see a market that has been in an uptrend. Since this is a reversal strategy, we need to see a market that has been creating higher lows and higher highs before we trade this, and then we only trade it in the opposite direction. So our first rule that we're looking for is a market that's been in a previous uptrend. So the market's been making higher highs and higher lows consistently for at least two higher highs. So this would be higher high number 1 and higher high number 2 and two higher lows. So this would be higher low number 1 and higher low number 2. Now we can start to look for the reversal setup because now we know that we are in an uptrend, or we've started an uptrend. So as you can see here, if we were to try that, we have a higher low, a higher high, and a higher low, but then we don't get another higher high. It would have to be up here in order for us to take a trade to the downside or a reversal trade on this specific ranging market here. Again, here we have a higher high, but there's no higher low, and there wasn't two other consecutive higher lows or higher highs. And here we only have one higher high with no higher lows. So after the market starts to trend, then you begin to look for your reversal trade. And that's not the only aspect. There's one other rule that I use that we'll discuss here shortly in this reversal trading strategy. If you would like to start writing these rules down, your first rule can be that you're looking for a market in an uptrend. And guys, this is something that's very important when creating a strategy. You can't just say a market in an uptrend. You have to have a clearly laid out way to define an uptrend or a downtrend. As I discussed earlier, my clear way to define that is by looking for 2 consecutive higher highs and 2 consecutive higher lows after we've already made a high, an initial high, and an initial low. So as you can see, we come up and make this initial high point and this initial little low here. We break through that, making our first higher high, then our higher low, then our second consecutive higher high, second consecutive higher low. As you can see, I've created rules or conditions that tell me when I can and cannot classify something as being in an uptrend or in a downtrend. And that's very important when creating a strategy. You don't want to just say when the market's in an uptrend. That's way too subjective. So as I said, that's very important when creating a strategy. Now we have that in place. We know that we have to wait for a market to be in an uptrend. We know we have to wait for a break of that previous level of support here. This would be our most previous level. And at this point, I like to use a couple of different ways of entering the market. If I don't have a huge candle that breaks out down to the low side, I may just sell right here as we break below. But if I have a very big candle that breaks below, then I may wait for a pullback either up into this structure level, or at this point you can get a little creative. You could even use a Fibonacci retracement from swing high down to swing low, and maybe look for a 618 or a 786, even a 50% retracement. Or if you wanted to add rules to this strategy, you could even only trade this whenever a Fibonacci lines up with a previous structure level, and then set a limit order there. And that would actually be beneficial because at that point you're trading with a limit order instead of having to sit by your computer all the time. But just a few different ideas there for other ways to trade this strategy. Now, I hope you've wrote all this down if this is a strategy you plan to test, because I'm about to delete some of this and share with you guys my last rule for trading this reversal strategy. And if you haven't had a chance to write it down, you can just rewind the video and go back over this section. So let's go ahead and delete all this. And for my other rule that I'm going to share with you guys, I also wait for the market to bounce off of a previous higher time frame level of support or resistance. So that probably got a little confusing. Let's consider that this would be a 4-hour resistance level. Say I'm trading on an hourly chart, I'll go up one time frame. So if I was trading on the hourly, I would go up to the 4-hour. If my trading time frame is a 4-hour, I would go up to the daily. So this is a level of resistance on our 4-hour time frame. I'll change this color to orange, and this is going to be our hourly time frame right here. So we have an initial high, an initial low, one higher high, one higher low, 2 consecutive higher highs, 2 consecutive higher lows, and then the market hits this 4-hour resistance level or this higher time frame resistance level. So not only do we need the market to be previously in an uptrend, which we defined as 2 consecutive higher lows and higher highs, we also need the market to come up to, while in this uptrend, come up to a higher time frame level of resistance or support, and then we need to see this market break below the previous level of support, which would be right here. And that's when I said, I like to trade the initial breakout sometimes. I also like to wait for a pullback if that breakout candle was a little too large, either up into our previous structure, or in a move like this, maybe wait for a 50 to a 618% pullback using Fibonacci. And I know I said at the beginning of this video that it would be completely structure based, but this is just an add-on rule that you can choose to use and test if you would like to. So now I hope you're starting to understand the rules of this reversal trading strategy. And what we'll do now is discuss a little bit more about the Aussie yen trade, and I'll go through the market and show you guys exactly what I was looking at and the exact reason for placing that trade using this strategy. All right, so if any of you guys are interested in learning more about this strategy or other strategies that I use in my personal trading every day, then you can do so by joining the EAP subscription service. If you'd like to learn more about that service, then there will be a banner in the top left-hand side of your screen that you can click, and it will take you to a separate page where there's a video that will explain a lot more about the EAP, and there'll also be a link in the description labeled EAP. So now let's take a look at the Aussie yen, and I'll show you guys how I use this strategy in order to capitalize on over a 200 pip drop on the Aussie yen. Alright guys, so here we are on the Aussie yen chart, and we're actually on the 4-hour time frame, because first off I want to show you guys that last rule that we discussed, which was that the market must be pushed down from a previous level of resistance or support. And as we can see, we have this previous level of resistance here on this 4-hour time frame that was actually tested multiple times. So now we'll drop down to the 1-hour chart and take a look at the actual entry. Alright, so here we are on the 1-hour chart. And so let's take a look at what the structure has done. As we can see back here, we have our initial high after the break of this resistance, and that makes this our initial low. So we have the initial low, the initial high, and what we're looking for next in this strategy is 2 consecutive higher lows and higher highs. So we have a higher low here because we're higher than this previous low, right? And then we have a higher high here because we're higher than this previous high. So that makes 1 higher high. We have a next consecutive higher low here because we're higher than this low. So that's 1 consecutive higher high, 1 consecutive higher low. Next, if we draw across a line, we want to look for the break of this resistance level and then the pullback. That's going to count as our next higher high and higher low. So we have the break and close above that previous higher high here, which makes for our second consecutive higher high. And is this low higher than this low? Yes. So now we know that the market is in an uptrend defined by our rules. We have a low, an initial low, an initial high. We have a higher high. We have a higher low, a higher high, a higher low, a higher high, and a higher low. Now we don't necessarily need this, but we also get another higher high here. So this market is definitely in an uptrend. It's definitely running up against a previous 4-hour level of structure. Next off, we wait for the break of structure support. So let's go ahead and remove all this. So as you can see, we push down from that higher time frame resistance level and we get a higher low. But this time, instead of creating a higher high, instead of coming up like this, creating a higher high and a higher low, we actually came up, made a lower high, and then broke through that support. Now that is good to see that we broke through this support, but this was not our major support level. This was not our previous higher low, right? Our previous higher low was right here. And that's the one we're paying attention to. So if we look with our line here, if we go ahead and delete that, you can see that we actually closed below that low. And that's what we're looking for. We're looking for a close below our previous higher low. So there's the close below that low. And because this was such a big move in through here, I decided to actually trade this on a pullback. And so from our high down to our low, I got in right at that 50% retracement. After taking that trade at the 50% retracement and expecting this to be a reversal, I decided to go ahead and put my stop above this level here. And my target back down at a previous daily level of support. So let's go ahead and draw our position on. So a short position here. The stop is in the correct place. And so far, this trade has made a little over 200 pips. And depending on the close of this 4-hour candle, I may go ahead and take initial targets off on this trade. But as you can see on target 1, already 4.4 to 1 risk reward. And guys, this is just a simple trade using the simple strategy that I discussed with you earlier. And that's a strategy that I like to use in the markets on a daily basis. It's also a strategy that you can learn more about if you decide you want to be a part of the EAP. And you can also get your hands on about 4 or 5 other strategies that I teach in that program. Now that program doesn't just consist of strategies. You also receive weekly emails on trade setups that I plan to take before I actually place the trade. And also you have access to first priority email, which means any questions you have about the trading or about Forex in general, I will be more than glad to answer those questions. So if you're interested in any of that, make sure to click the link in the description labeled EAP, or there will be a link in the top left-hand side of your screen that you can click. So guys, I'm constantly asked, what is the secret to Forex trading? What's the secret to making 200 and 300 pip trades? Getting a 4-to-1 risk reward on some of your trades? And guys, this doesn't happen all the time. It's not like this strategy consistently wins at a 4-to-1 risk reward. But my answer to those people is always the same. Consistency is the secret to Forex trading. Finding a strategy that makes money, as difficult as that may seem, is nowhere near as difficult as staying consistent to that strategy. So if this strategy is something you would like to learn more about, as I said, you can go through the EAP. If you think you have enough knowledge on this strategy now, then do not trade this strategy with live money. Go through the market, test this strategy, see how many times it wins, how many times it loses, what you can get when it comes to risk reward each time you trade. Calculate all that data. Be systematic about it, guys. That's the real secret to becoming a professional trader and to becoming consistently profitable, is to be scientific and systematic about your trading. All right, guys, so in conclusion, I want to say thank you for watching the entire video. It has been my pleasure to share my knowledge with you guys. Take this strategy, go ahead and see if it's something that you think would fit properly into your trading plan, and comment below and let me know some of your ideas or thoughts on this strategy. Again, if you're new, make sure you click that subscribe button to be alerted whenever I come out with new free educational content. You can go sign up for my email list if you're interested in receiving promotional offers on any of my paid programs or courses. I wish you all the best of luck on your future trades, and I'll talk to you guys next time.
Watch you stare. I would watch you stare. Oh, but there's no one there. We can figure this out. Put your feet down. And know there was a time when we never let go, never let go. Ooh, we never let go. We can figure this out. Put your feet down.